All right, good morning, members. It is August 28th, end of the month. Summer's almost over. The Labor Day weekend coming up, so short trading week next week. As far as what happened in these markets last week, we finally had the Yellen speech. Bounced things around on Friday, but the equity markets, if you look at them from just the trading perspective, they had a little bit of a loss, but not that much. A little bit down on the week, but overall, if you look at the year, still up pretty good comparatively, right? So not bad. Now that was on the surface, right, on the index level, and so overall, when we consider what this looks like, it doesn't look bad from the perspective of the indexes. So if I pull up the S&P 500 chart, we're still range trading. That range that's been in effect, right? You essentially had a little range back here, and then you went up and made a little higher one. And now with this coming back, it's almost like they're the same, but it's still holding. Now, remember we talked about MTTFs last week. Well, the MTTFs now are set up so that they may break. And we came within like a point on Friday, a little bit of an escalation in volume, not much. But essentially, we're testing the bottom range. We got underneath it, popped back in at the right. The buyers came in towards the end. And so we held that swing point low. But that swing point low now is set to try and break. And if we bring the MTTFs over, right, at 68.6, 70 is about the magic number, 70 to 80 usually. And so we may finally see those reset. But what does it mean to reset? Well, at this point, a reset could be in this top range up here. We may not even get below this, right? We don't have to break these anymore. We've got a higher one now, right? And that's what happens as this thing evolves. So you can actually get the reset, stay in this big range up here, right? Stay up in here, get your reset, and eventually be able to break this thing, even higher to the top side. So that's certainly a possibility when we look at these markets going forward. If we look at the NASDAQ, we have the same case, right? You got the little reset potential up here on this swing point low. And so it tested into it Friday, didn't quite break it. If we go over the Russell, it's a little bit farther down, but its reset is down in this area. So, I could see these markets continue to trade sideways, work off this big 10, 12% move to the top side, and then eventually try to break it out again. So I don't see, I think longer term, it certainly has a positive feel to it. Now, anything can change, and the big event that changed last week was, of course, the dollar, right? So let's pop over, let's look at the dollar and see the big move that took place on Yellen's speech. Because Yellen essentially came out and said, maybe we finally have that, strengthening case, right? We can raise rates again. And even though the market kind of yawned at it, the dollar didn't. Volume picks up, big escalation back to the top side, big wide price spread, high volume bar, right? That's one of our anchor bars. If you just look at the volumes here, right, this one's going to qualify. It looks like it's going to qualify. It certainly will soon if it doesn't now. 2.8, 2.85, 2.87, yeah, so it's a little bit higher. So it's going to qualify as an anchor bar on volume and on wide price spread. So that sort of a bar gets back into this low, right? And so now we're heading back the other way. Now, let's bring over the weekly chart and let's recognize that this is still within the range. In other words, we kind of had a range up here, this top half of the range, and then we kind of had a bottom half of the range. This thing is still within this range. Nothing's changed. It's going to go back and test this area again probably and try to get into the upper top half of the range. Perspective-wise, right, let's bring over the monthly. Perspective-wise, this is a large range up here too, and it held. So far, it's held on this range. Came down, pull this off so we can see it. Came down, tested the bottom end of this, right? And now trying to turn and go back the other way. Still a range trade. Range trades are not going to kill markets. They're not going to have the knock-on effect, right, that you'd see elsewhere. But with the potential that this is turned again, we have the ABCD structure now. If, in fact, this is the case, we have the potential to push up here in the top half of the range at this point. And so the dollar is going to have an effect. If we have anything that came out of Yellen's speech that is of any consequence, it's the fact that we're going to have effects off of this in the various markets, potentially not market moving, going to crash, going to skyrocket, but going to have an effect. And that is that all the currencies outside the dollar drop. The effect should be to support equities overseas, some slight pressure on domestic equities, and we should have pressure on bonds and commodities. We've already seen commodities start to drop. We've talked about that for a while. I've actually warned about that for about 2 or 3 weeks that we're going to probably see this. Now we're seeing in bonds. We pushed out of the bonds on Thursday. I believe it was Thursday, or I guess it was Friday on the Yellow News, or pushed out of the rest of the bond position. And the ideal there is that these are going to come down, and they're going to be buys at lower prices. They're up here somewhere now. We're going to buy them at lower prices. Let them come down, let them set up again, and give us better entries. Domestic equities, I say it's a mixed picture because you actually have things that are benefited by this move in terms of the equities. So, and we'll look at that in a second, but essentially financials and technologies, the two heaviest weighted industries or the two heaviest weighted sectors, those are actually going to be benefited by this, right? Rates rising, it's not going to hurt technology greatly, and it is going to help the financial industry. No matter what you're looking at, it's probably going to help the big banks. It's going to help all the banks in terms of their spreads that go to their bottom lines. It's also going to help the insurance agencies, insurance companies, industry, because they're going to be able to get higher rates of return. And so, that's the expectation. Those are the two heaviest weighted sectors. That is probably going to help the equity markets overall. And you actually could see that, and I want to turn to the sectors. You could actually see that taking place in the sectors on this move. So let me pop. I'm gonna pop through all the sectors. IBB really didn't say much, but if you go to the home construction, right, sells down, bearish engulfing. If you go to the IYR, the real estate, bearish engulfing, volume escalates. This is off the dollar move. Transportation index struggles. The SOX didn't care. This is technology, right? Just a doji. Basic materials, right? Bearish engulfing. Energy, bearish engulfing. XLF, positive, right? XLI, I believe, was a bearish engulfing too. XLK doesn't care, right? Holds up. So your two heaviest weighted sectors, XLF, XLK, hold up okay. XLP, safety stocks, trades down. Utilities get whacked, right? They have a competitor now in terms of interest rates. XLV is at an interesting state, and actually when I talk about the XLV, it's the first time back now to the retest regen on the daily time frame. This thing should bounce from here, and we actually saw a little bit of interest here on Friday despite the selling that we saw elsewhere. And if I pop over here, you can see that retest regen. Now it is within 6 bars, I believe, 2, 4. No, it's actually the 6th bar. Comes back. This also looks like a buy. We got out of, if you remember, we were in the XLV in the portfolio. We got out of that, missed a little bit of the upside, but now we get a better entry. This is a short-term buy. It's actually the best short-term idea on the notes when you look. And finally, if we go to the XLY, also bearish engulfing. So most of the market equities domestically are going to struggle as a result of this, but you have a couple that are going to do okay, which means we're probably going to grind sideways some more as a result. So if I come back to the notes here, recognize that that's probably the case, right? We're going to have equities supported overseas. We're going to have pressure on these others. Unless we get a fast move, and it doesn't look like that's what's going to happen, that breaks out, then we're not going to get huge knock-on effects. One thing that was interesting, volatility didn't even hardly pick up and it probably won't as a result of what we just talked about. Range trading is probably going to continue to be the name of the game. We're actually starting to see a little bit of a rollover on the larger term picture. Let me go back to the general markets. I don't think it's anything to worry about. I still think these equities are going to trade higher in the end. But we can get a setback. It is possible, right? And you can kind of see a little bit of a roll starting to take place up here on the equities in general. I don't know that that's overly concerning, right? We just had this big move, but it's a little bit of a roll. So we may see a setback that comes back and tries to test. It is possible, and we can't, forget this. We can't discount it. It's possible we could come back and do a full retest, not a full, but a retest regen off this prior swing point high. It's around 2132. So I believe the 2120, 2132 area is still the place to be looking for a potential setback. It's going to be a buying opportunity if it happens, though. And finally, coming back to the notes, MTTFs can reset. Already talked about that. 1 week before the vacations are over for the big players, they're out at the Hamptons, they're having fun on their yachts. They're going to come back. Labor Day usually, is the end of the summer. Not much likely to happen in front of that, except, if I turn over to the more general idea here, we do have the possibility of something happening, on these employment numbers. The market now, with Yellen saying what she said, the market now is going to look for clues as to when that rate hike is going to take place, right? They're going to be focused on any data, right, that supports it in September, because right now they're still not expecting it in September. They haven't priced that in. If they start seeing strong data, and we got PMI's numbers this week again, and we have in particular the employment numbers on Friday in front of a long weekend, this could move the market. If it's really strong, the rate hike idea is going to go up. The market's probably going to get hit in most places again, outside of probably the technology and the financials. And so we'll see, just like we saw on Friday with Yellen, we'll probably see that bump up, bump down type stuff take place intraday. Overall, I don't think we have to be overly concerned. If we do get the pullback in the general markets, it's going to come back into that retest regen zone and probably take right back up. So we have to continue to look at any kind of a larger reset as an opportunity. And we have to just be patient, because we can't make the market move. We have to wait on it to move as well. One thing I would note is the fact that we have a positive technical picture is good, but we have the probability of a fast false move taking place. And what I mean by that is we've got very compressed ranges. Let me go back to the S&P. We've got very compressed ranges taking place here right now. And if you look at this, right, this is a very tight range. The S&P usually moves in about 15-20%, 15 to 20 point moves. It's getting like 10 to 15 right now. And it's done this for a very long time. And we go back to early June, right? So it's almost 2 months now of a tight consolidation range. When we get a bigger move, it's going to be fast and furious. The thing is if it comes to the bottom side, I suspect, let me draw this a little differently. I suspect if it comes to the bottom side, and let's draw this range in, if we get the move down, right, it's probably going to be a false move. And I say that because it's going to come back into things that are going to give it support, both on the daily and the weekly, and it's going to probably pop right back up fast and furious. And so if this happens, we have to have our list ready, and we have to jump on whatever we're going to do. In my own portfolios, I already have positions in things I want. I will simply look to add to those if, in fact, that is what takes place. So going back to the notes, economic data, that's probably the main thing that the market's going to be focused on, and that's what we should be focused on as well. Anything that tells us that we're going to get a larger move to the downside near term will give us an opportunity, and we should be aware of that and trade that if it happens. Range bound still, MTTFs can reset, like I just said. what do I think is going to happen in terms of the coming week? We still have, the possibility that we could trade back to that 2120, 2130 area. Upside, I think, is pretty limited the coming week, maybe 2200 at best. I've kind of scaled that back. I don't believe we're going to get that high. I think we're going to get the MTTF resets this week. More choppy consolidation, right? But overall, these ranges are probably still going to hold into the end of the week. I think Friday's the toss-up on the employment number. Okay, that's where we're at. It's more of the same. It's been this way for a couple months. There's not much else to talk about. We are going to get those resets on the MTTFs. It's the most bullish case if they simply reset up here in this tight range, and then this market turn around and head back to the top side. So this is the most bullish case you could expect. It looks like it may get the reset, stay in the range, and potentially just take off without ever coming back to do that larger retest regen bullish on the dailies and the weeklies. Have a great one. Take care.